It's now, it's exactly 3 minutes after 9 o'clock. Welcome. My name is Sudarshan Shanak. I'm with the San Diego and Imperial Valley Small Business Development Center Network. And just to share with you that the Small Business Development Center Network is part of a very large program that provides technical assistance to small businesses all over the country. So back in 1980, our federal government, recognizing that small businesses are really the engine that drives our economy, felt that these engines need some kind of a fuel to keep them going. And for that supplier of fuel, they turned to a nationwide program, created a program, actually, the Small Business Development Center program, where you can get free business advice from business advisors who have a lot of experience and knowledge. You can also get a lot of business training. While some of the training may carry a nominal charge, the bulk of the training has no charge. So how is it that we are able to provide you all these services? Well, we're able to do so because we're funded in large part by the United States Small Business Administration, as well as the Governor's Office of Business and Economic Development here in the state of California. We also receive funding from many other agencies, as well as many of the financial institutions that support small businesses by supporting the programs that the Sbdc offers. So we're very appreciative and thankful to all these financial agencies, organizations that are able to not only directly assist our clients to get funding, but also provide assistance to the Sbdc program. So we can have qualified paid employees who can then help you move your business to the next level. So with that, I do want to share with you some of the things that have been going on. Of course, since the start of the pandemic, the federal government launched some massive programs. The first one was the EIDL, the Economic Injury Disaster Loan Program. Many of you may have taken advantage of that, but those who have not, or those of you who already got some funding from the EIDL and would like to get some additional funding, please go ahead and apply for additional funding. That program is going to be ongoing through the end of the calendar year. So December 31st, 2021, the EIDL is open until that. Of course, the advanced programs and all that are gone. So some of the other programs, the Shuttered Venues Operators Grant, the Restaurant Revitalization Fund, hopefully many of you took advantage of that. And then in addition to that, the federal government provided a lot of assistance to people who already had loans, which were SBA loans. So there were some of those loans were paid for by the federal government for a period of time. Going forward, just remember there are other things that the IRS has done, like the Employee Retention Tax Credit. That can be a very, very beneficial tax credit to many of you. So please work with your CPA and make sure you're able to take advantage of the Employee Retention Tax Credit. Now, beyond the federal level, we have the state of California come in with the California Relief Grant. That was just huge. It came in 2 chunks. It would end up being a total of 9 rounds. And just a huge amount of funding. The last day to apply for that was yesterday. So for those of you who applied and have not heard back, hopefully if you were waitlisted from previous rounds, you're automatically in consideration. But those of you who may have applied for the first time, you should start hearing back from Lendistry, who's the only intermediary on the California Relief Grant, sometime in the next several weeks. The most important thing is to be patient, right? So it takes time. There are a lot of applicants. In addition to the federal and state programs, there are local programs. The county, the city, and many other organizations are providing CARES-related funding. So please, the county supervisors, each of the 5 of them have a significant amount of funding that is available to you. Go to their website, go to the county website, look for your own county supervisor, and go ahead and apply. It seems like the application process asks for a lot of information, but you should pretty much have that. So prepare yourself. If you need any help, please reach out to the SBDC. So with that, I'm going to tell you that the SBDC is here to help you move you to the next level. And we're delighted that we're able to bring a program like this one, which is connecting with capital, to each of you. So with that, I want to make sure that we all know that many of the financial institutions who are right here today, participating in this particular Connecting with Capital, have always been supporters of this particular program, and we thank each and every one of them. So with that, I'm going to go ahead and start our conversation this morning. So we will start with an introduction by each of you. So let me go ahead and start with you, Juan.
Good morning, everyone. I'm Juan Garcia with Banner Bank here in Chula Vista. And here at Banner Bank, what we offer is we have our working capital lines of credit, we have our equipment loans, we have commercial real estate. Our lines of credit can be as low as $5,000. On the lower end of the lines of credit, we have a simple application process there. But that's our focus right there.
Awesome, that's great, Juan. And good to see you, Rosalinda. Please introduce yourself and tell us a little bit about your programs.
Hi, I'm Rosalinda Delgado, Business Development Manager at Accessity. I've been with the organization for 9 years, and what we do, we provide small business loans up to $100,000 to start up and growing businesses in need of capital, and they are unable to access capital from a traditional institution like a bank. We have been serving Southern California for 27 years. We recently changed our name from Acción Serving Southern California to Accessity. And we work with all sorts of business. We'll learn more later. Thank you for having me.
No, you're very welcome. We've had the pleasure of working with Acción and now Accessity for many, many years. And they're a great organization which can help you pretty much at every stage of your business life, but really are helping you in those early days where you may have a lot of difficulty getting funding from other places. And their goal always is to try and help you so you become bankable once you grow with some other organizations. So thank you so much, Rosalinda.
We're still doing California Rebuilding Funds as well. So we're still lending up to $50,000 as participating lenders for the California Rebuilding Fund. Thank you.
Yeah, Rosalinda, how long is that going to be open till?
I have no idea. So I don't have a deadline for that yet. It's still open, still money. We still
Okay,
have money
so please, those of you who haven't tried that one, go ahead and jump in, because we know economic times are tough and it's difficult to get traditional funding sometimes. So let's go ahead then go on to Miriam. Miriam, welcome.
Hi.
Hi.
So yeah, my name is Miriam, and I have been with CDC Small Business Finance for almost 4 years now, in the industry for 18 years. CDC is a nonprofit lender, and we've been around for 40 plus years. Really, our mission is to help Hispanics, African American, low or moderate income area small business owners, or really anyone that maybe is a startup and might have a little bit of difficulty in accessing capital. So that's our mission is, women, veterans, anyone that might have a little bit of difficulty accessing capital, whether it be a low credit score or just a complete new startup. That's what we are about. So our loans range anywhere from $20,000 to $250,000, and yeah, we partner with everybody here at Sbdc. I'm constantly on a weekly basis sending, business advisors referrals. So we all work together here, and also Accessity and other bankers as well.
Thank you. And well, with that, let me welcome DeWitt. DeWitt, go ahead, please.
Hello, I'm DeWitt with Pacific Premier Bank. We're about a $21 billion California chartered commercial bank. We've been here about 6 years and focus on business lending, real estate lending. We offer lines of credit, term loans, commercial real estate financing, construction financing, SBA loans, state guaranteed loans. Our loans start as little as $5,000 and go up to $50,000. with a 2-page application, or 50,000 to $250,000 with a 2-page application and 1 year of financials, or $250,000 to $100 million or more with full underwriting. And we also offer a full suite of treasury management products for small businesses, from low-cost merchant processing, corporate credit cards, even FX wires. So if anyone is doing a lot of transactions with overseas or international wire transactions, we can definitely save some money there, and a number of other products.
Awesome. Great job. Thank you so very much. So Janelle, once again, good to see you and welcome. Please introduce yourself and talk a little bit about the programs that you offer.
Thank you, Sudesh. It's good to see you as well. My name is Janelle Shalil. I'm Business Relationship Manager here at Chase. Chase is a full service bank. We're nationwide. We're the largest bank in the nation. I think we're located in all 48 states right now, but we're working on getting presence, and expanding our market. We do everything that a large bank does. Again, all lending starting at 5,000. We can go up to however much you cash flow for. We do the treasury management. We do everything the full service bank does. One thing that's exciting for us is we started a new division. It's called a Minority and Entrepreneurial Division, where we assist minorities, whether you're a woman, a vet, or a minority, where if you're having difficulty finding financing, we have a mentor that works with you and guides you through the process. So that's something that's new that Chase is rolling out, and it's really exciting to hear about.
Thank you, Janelle. Much appreciated. So with that, let's go ahead, Pete.
Thanks for having me, Sbdc. Appreciate it. My name's Pete Deegan. I'm with LensSpark. We help with equipment financing and working capital solutions for small and medium-sized businesses. A lot like other lenders here, when you're maybe not in the best standing with your bank, maybe there's some credit challenges, maybe the equipment's made older than the bank would like, or for any other reason, we're there to help bridge the gap, and ultimately, get you back in good standing with your bank or keep that relationship alive. Our office is right there in Carlsbad, and feel free to come in anytime, schedule a visit. And yeah, just nice to meet everybody, and looking forward to answering any questions.
Well, that's great, Pete. I too am in Carlsbad, so one of these days when COVID permits or our college permits, we'll love to get together. So let's go ahead and go to Fred. Fred, please introduce yourself and a little bit about the program that you offer.
Fred Crispin. I'm with United Midwest Savings Bank. We're a nationwide preferred SBA lender. I run the small loan division for the bank, making working capital loans for startup and existing businesses from $20,000 up to $150,000 under the SBA 7A program. For the most part, they're unsecured loans. We take a lien on the business assets, but that's it. So the majority of the businesses we deal with don't really have tangible business assets. So in essence, it becomes an unsecured loan.
Thank you, Fred. So folks, we've had the opportunity now to meet with 7 representatives from 7 different financial institutions. We'll now dive a little bit deeper to try and see what it takes to do business with them. So Fred, I will get started with you. Would you please tell us what it takes for a client to get funded with your organization, and address any of the issues like credit, years in business, whether they're a startup, existing business, anything that you want to cover, and we look forward to hearing from you.
Ours is a credit scored loan program. We use the same model that SBA now uses, them behind me, the Fair Isaac small business scoring model, better known as liquid credit, but it enables us to approve an initial credit the same day we get the simple loan application into our office, which can be downloaded from the internet at sbdc.loan. Will take you to our loan application. Like I said, they're 10-year loans, fully amortizing, no balloons, no call options. Once we approve initial credit, then it becomes a matter of building that file, dotting the I's and crossing the T's to be in compliance with SBA's SOP and to protect that guarantee. So we move it down that assembly line, if you will, as quickly as we can into funding. Like I stated, for the most part, 93% of the loans we fund every month. We're funding on average about $10 million a month in this small ticket world. are basically unsecured loans. We take a lien on the business assets, but that's it.
Well, that's great to know, Fred, that you take lien only on the business assets. So thank you. So Pete, same question to you. What does it take for a client to get funded with your organization?
Yeah, as far as the application process, we're fairly light. For the equipment side of things, usually just the application and a quote if you have one, but we don't even need that. If you just have a description, like I'm buying a dump truck for $50,000. And then if you're looking for some working capital, we'll typically look at some business bank statements. And without doing a hard pull on credit, so it won't have an inquiry, soft pull only, we can usually get an offer on the table within about 24, 48 hours. And, you know, there's additional documentation from there with the funding process, but the meat and potatoes of it, it's very easy and very quick. There's no application fee either. As far as requirements, we're typically for equipment, we're going to need about 2 years time in business. We do not do startups anymore, waiting for that program to come back eventually. For working capital, somewhere around a year. We're a little flexible, so you know we can kind of take every deal by deal. As far as any other capital requirements, I mean, typically we're not going to work well with that smaller businesses that are only bringing in, you know, 10,000 a month. I think our sweet spot is the 25K and up businesses as far as revenue is concerned.
Well, good to know that, Pete. I much appreciate that. So Janelle, tell us about what it takes for a client to get funding from Chase.
Okay. Yeah, so we're a traditional lender. So our requirements, we do startups, but it's not, we don't really have an appetite, I guess you could say, so to speak. We'd have to look at, you know, different situations if it's an expansion. We usually ask for 2 years tax returns. We look for, you know, a good credit score. You know, anything less than 700, you know, is a little trickier to get approval on. We do a lot of unsecured lines of credit as well. Same thing, just a UCC filing on the business. If you do real estate, or if there's a higher risk issue, depending on the line size, we might ask for additional collateral. But we are a traditional lender. So we do have, like I said, we're a little bit tighter on our requirements.
Thank you, Janelle. I have a follow-up question for you. You did mention credit, and of course, a lot of people struggle with credit. Mm-hmm. What does a credit score tell about an individual, which helps you make a determination as to whether to provide funding or not?
Right. A credit score really goes based to your character and the past history with you paying your creditors. So we're looking to see if you've had issues in the past with paying people back. You know, we'd be a little more hesitant probably to lend money, as anybody would, if there's a past history of serious delinquencies. If there's like a bankruptcy with a medical or a good explanation, we can look at it. But yes, we do usually require a strong credit history.
Thank you, Janelle. So DeWitt, the same thing. What does it take for a client to get funding from your organization?
So to start off at the smaller side, a $5,000 line of credit or term loan would just be a one-page application and a 615 credit score. Then the next level up from that is anywhere from 25,000 to 50,000, and that could be a term loan, that could be a line of credit, and that requires a 680 credit score and an application and a 2-year track record. The $5,000 loan, that's only a 12-month track record. 25,000 to 50,000, 680 credit score, application, and 2-year track record. And then 50,000 to 250,000 would also be a 680 credit score, a 2-page application, 1-year business tax return, the most recent year-end financials and year-to-date financials. Anything above $250,000 would be fully underwritten. Less emphasis on the credit score, more emphasis on the business performance. So $250,000 or more, that would be two years of taxes, 2 years of financials, year-end financials, year-to-date financials, personal financial statement. That's basically it. The small business programs that we offer really make it easy and pretty transparent for a business owner to kind of size up what the requirements are. Do they qualify on the front end? And typically it's like a 2-week process to get a credit decision and about another 2-week process to get loan docs. So start to finish, it's a 30-day process for all of the small business products.
And when you talked to it about the 2-week or the 4-week process, the start time is after you get all the documentation from the client, correct?
Yes, that's exactly right. So if a client sends, let's say they're applying for a $250,000 line and they just send the application to me, I'm probably going to follow up the same day or within hours or minutes, letting them know I can't start the clock until I have your tax return or X, Y, and Z. And you're absolutely right. The clock doesn't really start until the bank has all of the information we need to actually start the underwriting process or start the review process.
Wonderful. Thank you for that clarification. So Miriam, what does it take to do business with CDC?
Yeah, so as I mentioned, we're mission oriented. So we really, about half of the loans that we do are for startups. So that could be a loan in the phase of, hey, Miriam, I'm working with the small business development and I'm working on my business plan and projection. So it could be someone that, you know, hasn't started operating, but wants to operate and has a plan to operate. And so we're going to be looking at a minimum credit score of 620. And we're also going to be looking that they can support themselves financially, because we want our loan to be used for their business, of course. That also can look like a small business owner that started maybe 6 months ago or 3 months ago or a year ago or even almost 2 years ago. We still consider those startups. So that means that they would be projection based. They could still be negative as far as having any income, you know, maybe sales, but they still don't have any net profit. And then also existing business owners, of course. And same thing, 620 minimum credit score. I've been seeing a lot of acquisitions lately and helping a lot of borrowers just, you know, either franchises or purchase, you know, a small mom and pop shop that they've been wanting or thinking about purchasing. So same requirement. There is a 10% injection requirement if you're thinking about purchasing an existing business. And then there is a 20% injection requirement if you are thinking about starting a business. And so same as some of the other lenders that I listen to here, as far as in collateral, since we do specialize in startups, you know, we don't ask that you have to have collateral to, you know, fund your loan or get you approved. Although if you do have it, we may ask for it. So just depending on the scenario. What else? We're still doing some COVID loans up to $50,000, which means that 2020 income could just be almost zero. But if 19 looks good, you may still qualify for a loan up to $50,000. That loan interest rate is a 5%. And the highest rate that we'll go to is an 8%. We have fixed options as far as an interest rates and some variable options as well. I've been doing getting a lot of requests lately for local people in North County that are wanting to purchase kind of like condo commercial properties for their businesses. So we do those as well, actually, and we give you a 25-year term. So, you know, a lot of times, a lot of the larger lenders are really great and competitive with the larger commercial real estate, but the small is hard for them. So, you know, if you know of anybody that wants to do a commercial property up to $250,000, for these condos that are selling for businesses, we can do a 25-year term on that with no payment down. So they don't need to bring anything down. It can be 100% financing. So yeah, I think that pretty much covers what we offer. Did you have any other questions for me, Tradition? Something I didn't cover?
No, I think that's good. So two important things that you said, of course, you know, make sure that you, whatever money a financial institution is going to give you is going to be for business purposes, not for your personal living expenses. So just when you start the application, don't get tempted to give up your job, because you need to keep the money flowing in. It often happens, people think, oh, you know, I talked to the credit counselor or whoever it is that's looking at my loan application. I feel pretty darn good about it, so I'm going to go ahead and quit. Please don't do that. And if your other half or your better half or your spouse or whoever else is with you, make sure they don't quit either. It's important to continue to have that secondary source of income. So with that, let me go ahead to Rosalinda. Rosalinda, what does it take to do business with Accessity?
Am I mute? No, I'm not.
You're fine.
So we have several programs. We have We help startup businesses from day one. So they have to show another source of income. That source of income does not have to come from them. It could be from a spouse, it could be from a parent, it could be from someone willing to support them while they start their business. We also help growing businesses. Now we have 2 programs, at least the rapid loan up to 8,000. This is a very simple process, up to 3 days. So they can be approved in 3 days after they submit all the documentation. Is usually a 6 to 36 month term. And the only documents that we require are basically 1 year of taxes and 1 bank statement. And they have to go through an interview process. Now, our regular loan program goes all the way to 100,000. Now, we don't have a minimum credit score for any of our programs. However, if you don't have good credit, or if your credit score is low, we are going to look for other mitigating factors. So currently, we don't require collateral, but if you have a very low credit score, we want to find a mitigating factor that can pretty much overcome that weakness, right? It could be a collateral, absolutely, that if it's fully secure, right, well, the credit score is not going to be that impactful. Now, we don't have any prepayment penalties. It's a fully amortized loan. Our maximum loan term is about 72 months, which is 6 years. It's simple interest. We don't have an application fee. All of our loans are guaranteed by the State of California Guarantee Program. So we do not do SBA lending. The State of California Guarantee Program guarantees 80% of all loans starting from 15,000. We also use California Capital Access Program to provide that loan reserve for loans above $5,000. There is a closing fee for our loans. We're also doing a COVID relief loan up to 50,000. If you were profitable in 2019, you were doing very well in 2019, you need to show at least a 10% reduction on revenue in 2020, and you will be eligible for this program. The minimum credit score for this program is 500, and you can have up to $10,000 in collections. It's a 4.25 for 60 months max, and there is no prepayment penalties, and you only pay interest for the first 12 months. We help pretty much all sorts of businesses, and I guess there are certain industries that we do not serve, and I think that's one of the questions coming up, so we'll talk about that later.
Yeah, okay, thank you. So let's come to Juan, you then. What does it take to do business with you?
Well, with regards to years in business, I mean, we'd like to see a couple years in business. It doesn't necessarily have to be 2 years. I mean, we had an architect who branched out on his own after 30 years of experience working at another firm, and he had about 18 months under his belt, and we were able to help him with a small line of credit. But ideally, we'd like to see at least a couple of years. We like a full financial package, especially for our loans less than 100,000, our loans and our lines that's less than 100,000. It's a streamlined process. Real important to make sure that that application is completely filled out, because we don't collect any additional information other than what's found on the application. And so it's really credit driven, and we'll look at the other things, the other items too, cash flow and collateral as well. So yeah, that's it.
Thank you, Juan. So let me ask this question of Miriam. Miriam, you're heavily involved, and maybe DeWitt and Janelle in a lot of SBA funding. So what are the kind of businesses that you do or do not work with? So if you will, Miriam, answer that question. And then I will not ask that question of everybody, but I will ask Janelle or DeWitt if they want to add to anything that you say. So what kind of businesses would you not do work with?
So the only businesses that we will not work with would be anybody who's in the adult interest industry, or anyone who is selling any sort of marijuana or has anything to do with marijuana. Those are the two industries we don't touch. I know that, you know, SBA has a few rules and those are it. Other than that, I think it's probably lender appetite on what, you know, industry they want to entice or not. So we're pretty open to all industries other than those two industries, which SBA does not allow us to participate with.
Awesome. Thank you, Miriam. DeWitt, do you have anything to add to that?
No, I would say we really don't shy away from any industry. The one that sometimes I get asked about is the cannabis industry. And with the cannabis industry, basically, if it's anything that touches the plant, has to do with selling the plant, that we can't touch. But if it's something like a lighting company that supplies the lighting or is a vendor to CBD companies or things like that, we may be able to look at things like that, but generally speaking, anything that has to do with hemp, cannabis, CBD is going to be a challenge for us. All other industries are okay. Restaurants, entertainment industry, even I've looked at bail bond companies in the past and bank a few of those as well. So we're pretty industry agnostic.
Awesome. Thank you, DeWitt. And Janelle, do you have anything to add to what Miriam and DeWitt said?
Yes, you know, we're the same. We have a federal charter, so anything that is not, you know, it's not legal federally, we're not able to do. We can do CBD if it's topical. If it's ingested, we cannot touch it. The other industries that we would not lend to would be anything that would have reputational risk for us. So something that would cause, you know, negative publicity, we wouldn't do. I know we do have issues with, you know, firearm sales and ammunition, things like that, just because it's such a hot topic.
Thank you so much, Janelle. So, you know, my next question is going to be to some of you on what are the first steps that they should take if they're looking to get some funding. But let me start off by sharing with everybody that when it comes to funding, it's a process that has to be navigated. It seems like it's uncomplicated, and in large part it is, but there is a lot of information that the financial institution is going to need. Just remember, it's like you. If somebody came to you and wanted to borrow some funds from you, you will have a lot of questions depending upon how much you're asking for and what experience you have with that particular financial institution. So you have to have some skin in the game, and you have to be able to basically prove to the financial institution that you have the capacity to be able to service the debt, meaning that you have to be able to pay the loan and the interest on it on a timely basis, and then be able to provide any other kind of assurance to the financial institution that makes them comfortable that, hey, in case the business is unable to repay the loan and the interest on it, where do we go, right? Is there collateral? Is there other assets or whatever that you have? So skin in the game is very, very important. Providing them all the information that they need is very, very important. So let me go ahead and then ask that question of several of you. What is the first step a small business should take to access capital in addition to going to the Sbdc, which will help you get prepared because you know, we work with all these financial institutions. So let me go ahead and ask Pete that question. So Pete, what's the first step a small business should take to get access from you?
Oh, sorry, can you see the video? There you go.
Yeah.
So the first step, obviously, you know, gathering your documents. That's basically with any.
For some reason, I can't hear you.
Okay, sorry about that. So the first step, obviously, gathering your documents, you know, your tax returns, bank statements, etc., the best you can. That's pretty much going to be with any lender. For LendSpark specifically, an application, you know, lets us do a soft pull on the credit, obviously, and get to know your business. But just having a 5-minute conversation, very candid, open conversation with me or one of the other representatives there, and just tell them your situation. Hey, I had this bankruptcy, or hey, you know, Wells Fargo isn't going to do this piece of equipment for me because it's too old, has too many miles. And just let us know what the problems are, or, you know, hey, I need this loan. I don't have any cash flow, but maybe I can leverage a rental property my aunt gave me, or some situation. And we have so many different programs, and we are, a private lender, so we can really tailor something to you. So I'd say just an application and a phone call.
Keeps it very simple. So Juan, how about you? What's the first step a small business should take to access capital?
Well, I would agree with getting your financial information in order, and prior to actually getting that application, I would take a look, especially if you feel or that there's some potential issue with your credit. I would encourage them to take a look at the credit history, take a look, see what it looks like, make sure that it's accurate. If it isn't accurate, then that's the time to reach out to that credit reporting agency or that creditor and get that corrected prior to applying, so that when the credit is actually pulled, it's accurate and it's reflecting the way it should.
Thank you. And how about you, Fred? What's the first thing that the business should do to access capital?
Have a plan. Know what you need to borrow. It's frustrating when a borrower comes in and says, I want a loan. You say, how much do you want? Well, how much will you loan me? Well, that's not what we're asking. How much do you need? You need to have a business plan. You need to have a concept of what it's going to take to get that business open, not only from a licensing standpoint, but capital to get it ramped up. And how long will it take you to ramp it up? So you need a plan. You need to work with the Sbdc and develop projections and a plan.
Thank you, Fred. And that goes pretty much generally across the board, whether you're looking for funding or looking to take your business to the next level. It's important to have a plan, and that plan has to be thought out, and it has to be a living document which you constantly update. So just make sure that if you, in our opinion as Sbdc advisors, and I'm sure all the financial institutions agree here with me, if you don't have a plan, you really have the plan for failure. So unless you have a plan and track yourself against that plan and see how you're doing, how are you going to be able to take corrective action to get back on course? So certainly having a plan is very, very important. So how about you, Rosalinda? What is the first thing that a small business should do to get access to capital from Accessity?
Well, I will say all of the above. I mean, we definitely want them to make sure they have a look at their credit, because we don't want to do a hard pull for nothing, right? So we do a conversation with them before they even apply, so we can assess if they're ready for funding, right? They need to have a business plan if they want more than $8,000. Anything below $1,000, we will cover that on the actual interview. We don't require a business plan, but business plan with 1 year projection is going to be important. It's going to be important that they cover all of the 5 C's of credit, right? We want to see a good repayment history on their credit. We don't want to see any lates on car and mortgage. We don't want to see any anything major. We can overcome medical issues, so that's no problem. But definitely credit is a big one. And what I find is when I ask people about their credit and they say, I don't know, it's because they don't want to know. Okay, so usually the people that have good credit, they tell you right away, but people sometimes they say, I don't know, because they don't really want to look at it. But anyway, a business plan is, as I say, super important. If the business is an existing business, we're going to require, of course, financials and balance sheet and P&L. So a lot of people have P&L, they don't have balance sheet. So it's important that they have both financial statements, because we are requiring both. And of course, experience. We're going to be looking at experience, or how are you going to overcome that weakness if you have it. So if you are not very experienced in that industry, who are you going to bring into the business that will provide that experience? So those are factors super important. As I say, we don't require collateral, but if they have collateral available, we're going to consider it, especially to provide strength to the deal. We are not going to, we don't require an injection of capital, but we have to mitigate a weakness if there is no capital. So if the person has, let's say, a 401k they don't want to touch, that's fine, but at least tell me, because that's going to help the lender feel more comfortable that you have money stashed somewhere that in case of an emergency, in case of an extraordinary situation, you can use. It's important that you do your taxes correctly. We had a lot of people that didn't, and when the pandemic came, they were not able to access any relief because they did not show profitability in 2019 because they wrote off everything, and those businesses really suffer for not being transparent in their financial and reporting everything that they got, or deducting more than they should have. So all those things have an impact in the business in the future. So make sure your financials are accurate, and your taxes as well.
Well, thank you so much. So, when you start to borrow money from a financial institution, you're building a relationship. The financial institution is going to be your partner in a lot of ways. So it's very, very important, like some of our financial institutions have indicated here, to be candid and honest with them. And on top of that, be able to provide them timely and accurate and information that would help them make a decision. These folks are very, very busy. There are a lot of people out there looking for funding, right? So make sure that you don't end up, spending a lot of time with these people and there's nothing coming out at the end for them either. So they want to be able to productively spend their time. Financial institutions are in the business of lending money, but they want to be convinced by you that you're going to be able to repay the loan and any interest on it. So with that, I'm going to go ahead and move to the next question. So with the pandemic somewhat in the rear view mirror now, hopefully, I will ask that question of Janelle. Janelle, what are you at Chase thinking as to, is there any concern? Is there anything that you ask small businesses for related to the pandemic that could impact your financing decision?
Actually, at this point, Chase has pulled back some of the COVID restrictions. We did have a questionnaire, but I think looking at our applications now, we don't require to see how you overcame the transition from COVID. So I think we're full steam ahead on lending. All of our channels are open. We are getting quite a few approvals. Everything is open for lending. So there's really not any restrictions in place anymore. I think we've seen that our businesses have survived COVID. They've overcome the obstacles and they're moving forward. And so we're not hesitant in lending at all.
Awesome. I will add to that, Janelle, that we at Sbdc, of course, in addition to helping existing small businesses grow, we also help small businesses get started. And we have found that even during the pandemic, particularly now in the last 12 months, the zeal for people to start new businesses hasn't abated at all. If anything, it is even more prominent. So we are helping a huge amount of people who are looking to start a business. And of course, we help them get ready and validate their concepts and make sure that they have the resources that are needed to make their business successful. So certainly, people are putting COVID behind them at this point in time, but at the same time, being very careful that they do not end up becoming one of those venues where the disease will spread to others. So does anybody else out of our panel have any restrictions still in place because of COVID? If you do, please just raise your hand and I will have you make your comment. Okay, Miriam.
Yeah, so I wouldn't say restrictions, but pre-COVID, we did not collateralize anyone's home. And so as I mentioned before, we definitely are not collateralizing everyone's home, but it is on a case-by-case basis now. So I'm looking forward to 22 us seeing less of that. That being said, I mean, honestly, what has come out of COVID now, kind of hopefully looking, that's in our past, is that we're seeing much better applicants for startups, for existing businesses. I mean, business owners that have just become resilient and they have several revenues of income, right, in their business, not just one. And they know how to jump online, or they've only jumped online now instead of retail, and they're more profitable. So, I mean, honestly, things are looking positive. I'm seeing a lot of approvals again. So yeah, you know, at CDC, we never stopped lending, although we did pull back as far as in, you know, being more conservative. But I think we're definitely circling back to not being where we were at quite before COVID, but being a lot less stringent than in the middle of COVID.
All right, awesome. So I'm going to ask two more questions, one from one panelist and another one from another panelist before we go to our participants here and take some of their questions. So Juan, I have a question for you. What is the one thing that a business should never do if they want to get funded?
I would say never not be honest. You know, I can't tell a small business owner, you know, I've been in the industry for 18 years. So for me, it seems like something I've known for a long time, but I can't tell you guys how important it is. Just as Fred mentioned and Rosalinda mentioned as well, like, your relationship with us, even that first conversation, you knowing what your credit score is, how much money you need and why you need it. This is all a trust relationship. Like, we need to be able to trust you, right? If you're asking for 20,000 or 250,000 or 500,000. And so that being said, in addition to the initial conversation that you have with us, everything that you say, everything that we ask you, I can't even tell you how many hands touch one loan. I mean, there's so many hands, so many people testing what you've said, so many people looking, you know, behind, you know, okay, what judgments, what liens do you have? So you just definitely want to be honest about that. If you had a bankruptcy, you know, don't tell us that, you know, don't miss that information. And definitely go onto Credit Karma or something of that sort and know what your credit score is. You know, meet with Sbdc. They're amazing over there. Let them work with you to know, you know, how much money you need, what your projections and business plan are. And then all of us on this panel, I pretty much know everybody on the panel. Everyone here, you know, Sudarshan and Daniel, everybody at Sbdc, they chose us to talk to you guys because they know that we care and that we're reputable lenders. And so we all refer back and forth to each other too. So be honest. If I can't help you, maybe Rosalinda at Accessity can, or maybe, you know, someone else at Banner Bank or Chase can help you. So we're all connected. Just be honest, and we're here to help you, you know, succeed in whichever way we can.
Thank you, Miriam. So Juan, the last question is for you. Please provide a recent lending success story.
Okay, we had a business that applied here, and we've had 3 owners, one about 60%, the others, I don't know, 20, and whatever the other 20%. The one of the owners, the primary owner, he his credit wasn't as good, even though that was his primary source of income, and he was the day-to-day person as the other 2 partners. Initially, when their request was for $100,000, we took the application. It's based strictly on the application. Credit decision was that we wouldn't be able to do it because they had a loan, and that loan had encumbered the business assets, and there's a couple other things too, the credit being one item. When we went back to the borrower, we looked at one of the other guarantors. The other guarantor was really strong. Even though he had a smaller percentage of the business, he was really strong, both on the credit side, and he actually had lendable equity in his home. So we went back to the borrower and said, hey, look, we can't do it this way, but we can look at it this way. And so we've got kind of a little give and take going on. We're still looking at it, balls in their court, but if they say yes, we have a deal.
Awesome. So see, folks, just know that these lenders here are very creative. They know the ins and outs of lending. So if they see that one particular path is leading to an obstacle or roadblock, they'll try and go around it and see if there's another way they can open up that channel. So with that, I'm going to very much thank the panelists. I'm not going to be asking you any more questions. because we're going to take some time here to see what some of our participants have to ask. So go ahead, Desiree, if you will, please open up and ask the first question.
Actually, there are no questions in the chat right now. So if any of the participants would like to unmute and ask a question, they can go ahead and do that.
Oh, hi there. I have a question.
Please introduce yourself.
Yes, my name is Kathy Custer, and I currently own a business, and I want to start a new company, and I would need to borrow about $250,000 to do that. So my question is, I had missed it. I'm very excited to apply to the bank that's a nonprofit, and I missed the name of that lender.
So you
CDC
think
Small
of,
Business Finance.
go ahead.
Oh, I was just going to say CDC Small Business Finance. I'll put my information up there again, but we do
Oh,
do
thank
loans
you.
up to 200,000 for startups. Yeah.
Oh, that's wonderful. Okay, CDC Small Finance. Thank you so
Small
much.
business finance, yeah.
Small Business Finance. Okay.
Right. They've been a long-term partner here with Sbdc, and well, like Miriam said, all these financial institutions that are here on this panel, along with the many others that we work with, they're very reputable, right? So let us at the Sbdc help you navigate the process, put your package together, because we know pretty much what each of these financial institutions needs, and we can help make it a little bit easier and ask you some specific questions. For example, what do you need and what exactly are you going to need it for? You do not want to go to the bank, like I think Fred or somebody else said, maybe one, saying, hey, I need $400,000, and then ends up that 300,000 of that is going to be sitting in your bank account for a period of time. So you need to be able to clearly identify, I think that's what Fred had said, exactly what do you need and what are you going to use it for? So make sure that you're able to get all the assistance you need to be able to put together your loan package. All right, is there anybody else who has a question? If they do, please, like Desiree said, go ahead, unmute yourself and ask the question. Keep any confidential information from being shared here.
There was one question in the chat asking for Juan Garcia's contact information. And then there was another one asking whether or not anyone here specializes in healthcare therapy industry.
My contact information, I just put it in there, but I don't know if I may have directed that back to Rosalinda, but I can be reached at 619-827-8101. That's my direct line, 619-827-8101, or at juan.garcia@bannerbank.com.
Thank you, Juan. And Desiree, the second question was something to do with the health industry.
Yeah, we do a lot of healthcare under our small loan program, startup chiropractors, in-home care, you name
Is this a medical doctor, or is this just in the healthcare industry?
Can you tell Desiree from that?
It just says therapy industry.
Therapy, okay. Yeah, so because we do have a dedicated a program for medical doctors and dentists. We can do 100% financing, but on healthcare, you know, we do have loan programs available as well.
And I think most of these institutions here indicated, you know, the couple of areas or industries or groups that they would not lend money to. And then they're going to take a look at the business itself, its history, and the people behind it, and whether the loan that they're looking for is something that they're going to be able to repay along with the interest. And if they cannot, then is there somebody in the organization, like one said, you know, maybe a shareholder or a guarantor or somebody like that who has a greater capacity to be able to help the bank make that decision. So yeah, absolutely, you know, stay aware of all the fintech companies that are out there. There are a lot of people lending money, and quite honestly, we would encourage you not to go to those. Talk to your Sbdc resource partners, your Sbdc advisors. We can help channel you or guide you, and then with the relationship that we have with all our panelists and others, we can try and fit you in with somebody who might be able to truly help you without, you know, absolutely charging so much interest and so having such a short repayment term that you end up being set up for essentially failure. So be very, very careful with those fintech companies, and it could also end up negatively impacting your credit score. All right, any other questions?
I see none in the chat.
Okay, awesome. There's somebody, I think Francis, who's just wanting to get admitted right now. So maybe go ahead and admit them. I don't know, they haven't heard the rest of the program, so maybe they won't be able to ask any question. But before I wrap this thing up, I just want to once again not only thank all our panelists for the funding that you provide to the small businesses, but also the support that you give to the Sbdc, so that we can in turn help small businesses get ready for financing and grow their business in different ways. Secondly, I want to once again remind all of you that there are still some funding options available out there related to CARES Act at the federal, state, and local levels. So take advantage. Miriam touched on that. I think Rosalinda touched on that too. There are programs still out there. Don't let this opportunity go by, because while COVID has been a disaster for most people, it also has opened up some doors for people to be able to get some financing, which maybe they may not have been able to get otherwise. So there is more compassion out there from all our financial institutions, in large part because of the tremendous support that we've gotten from the SBA and the state of California, both of whom we thank from the bottom of our heart. So with that, unless anybody has one last question, I'm going to say thank you to all our panelists. Wish you all a safe and wonderful weekend. Stay in touch, and we at the Sbdc appreciate your resilience and how you have come through this COVID, and look forward to helping you more as you look to take your business to the next level. So with that, thank you so much. Stay safe. Take good care of yourselves. Bye-bye.